Hi folks, Rick Wedell here. I'm the Chief Investment Officer at RFG Advisory in Birmingham. Today is Wednesday, September 9th, and I thought I'd come to you with a brief market update, talk a little bit about what we've seen over the past couple of days, which has obviously been another little bout of volatility. As I speak, the S&P 500 is at about 3,400. That is up about 2% year to date. So certainly an impressive performance given what we've seen in the economy. Certainly nothing to panic about. We're actually still above the highs that we set back in January, March timeframe before COVID really hit. But it's obviously off a little bit since September 2nd. And really that correction has been, that market sell-off since September 2nd has really been driven by the NASDAQ. So the NASDAQ actually reached a correction yesterday, down about 10% off its most recent highs on September 2nd. And it's really a valuation-driven sell-off. There's been a little bit of a bounce this morning, but basically the narrative is there's not a lot of macro news that's out there. There's not a lot of economic data or anything else like that that's driving this sell-off. It's really more of a, hey, the NASDAQ is still, even after the correction, up 30% year to date. Valuations appear rather lofty in that space. And so, it's not uncommon when you see a massive bull run like the NASDAQ has had to have a little bit of a correction or a little bit of a setback here every now and then as valuations get lofty. The nice thing about those valuation-driven sell-offs is that they tend to be self-correcting. So as valuations get higher, investors get scared, it kind of turns on itself and the momentum trade works in the other direction as you sell off for a little while until you eventually find the quote unquote, not necessarily value investors, but you find people talking about the discounts that they're able to purchase shares at now versus where they were able to purchase shares, merely a week or two ago. And you get some buyers that come out of the woodwork. So ultimately, in the absence of a lot of news, these types of valuation-driven sell-offs are ultimately self-correcting. And there's still a lot to be positive about as you think about the marketplace. I know, obviously, economic data doesn't look great now, but if you look at whether it's the potential for vaccines being released in the short to medium term, whether it's just the continued reopening data, all of those things, point to continued positive sort of economic growth over the near to medium term. Away from that, we obviously have the election, and we're going to have a series of events lined up to talk about the election and the various outcomes and what we think might happen and how we think you might want to invest. But I'll give you a little bit of a precursor, which is any party that takes control of the government come November is going to still be dealing with an economy that has unemployment rates in the high single digits. And so whichever party comes to power is going to be looking to stimulate the economy, not necessarily to restrict it. So with that said, as always, if you have any questions, please feel free to reach out to either myself or your advisor. If you wouldn't mind subscribing to our YouTube channel, we would certainly appreciate it. And with that, I hope you have a great day and a great rest of your week. Thanks.